Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs and VCs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Paige Doherty, a venture capitalist at Behind Genius Ventures. In this episode, we talk about her very clever and scrappy path to becoming a VC. She wrote a children's book on venture capital. She did some pretty interesting things on Twitter, etc. And we also cover tips for breaking into VC. We also cover her investment thesis and what Behind Genius is looking to invest in, tips for raising a new venture fund, why the concept of execution velocity is so important, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. This is really going to help you raise capital. To get instant access to this, click the link in the first comment. And while you're there, please leave us a nice comment, what you like about this episode or this show in general. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Paige.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Paige Doherty of Behind Genius Ventures coming to us from San Diego. How's it going?
Doing well. Thanks so much for having me, Nathan.
Likewise. It was fun to be on your podcast a couple of weeks ago, so it's great to have you here. Actually, we'll come back to your podcast, but let's start off with what is Behind Genius Ventures?
Sure. So Behind Genius Ventures is an early stage venture firm focused on investing in the future of work and the future of play. We think about community and content as the cornerstones of our fund, and I am the founding partner there.
I saw that, I think on LinkedIn. I love a lot of future of work firms out there, but also the future of play. I saw that and kind of smiled. I think that's kind of fun. What are some examples of companies you guys have done in, maybe give an example of both future of work and future of play?
Sure. So some of the sectors that we think about across the future of work and future of play are the creator economy, developer tools, fintech, and then holistic health and the infrastructure for connected fitness and gaming. So an example on the future of work side would be a company called Palette. They're community-oriented job infrastructure. And it's been really cool to witness their growth over the past couple of years. I first led a syndicate into Palette when I was just starting out investing, and then we ended up doubling down through the fund and then again through an SPV. And they went from a Figma mockup to paying out now over $2 million to creators that are running talent collectives and job boards. So it's a really interesting and aligned monetization strategy for folks that are building communities online. And then one of the examples on the future play side is a company called The Last Game Board. The founder, Shale, is incredible. Her family immigrated from India to Kansas in the 90s. She didn't speak any English, and she learned by playing Chutes and Ladders with the folks that lived in her apartment building. And throughout a career in venture and hedge funds and corporate America, she never was able to shake that connection that gaming brought her. And so she brought a 6-pack of beers into the office of the architect of the Xbox One and was like, hey, I really want to build a tabletop digital gaming platform because I want to play these board games, which I can't currently play with my family in India and across the world. And so we're just really excited about what she's building and empowering gaming infrastructure, and specifically for like Dungeons and Dragons as well, which is a game that's played all across the world, but previously was really challenging to play online. And so it's been a really interesting intersection of the physical and digital worlds.
Interesting. I wonder if Dungeons and Dragons has seen a big bump with Stranger Things, because they
yeah, it has. And then also in COVID, it saw a big bump. But I remember talking to Shale, and she was like, yeah, there's like thousands of board gaming conventions that go on. And so in her like user research, she did like a cross country tour and hit all of these different board gaming conventions. And it's just like, for a weekend, thousands of people are posted up in hotels and playing board games together, which I thought was so cool and something that I had no exposure to before. But the power of games is just so incredibly strong. So yeah.
Very cool. And what, okay, so future work, future play, what are some of the other things you guys are looking for? I guess what stage, lead investor, co-invest, typical check size, all that usual stuff.
Yeah, sure. So we're quite a collaborative fund. And so we, in our first fund, wrote 100K to 200K checks into pre-seed and seed stage companies. And we invest across the US and Canada. I would say we're a very founder first fund. So we've taken on bets that were pre-product, but had a really defined customer demographic that they spent a ton of time doing customer interviews with. I think that is one of the strongest indicators. And then we've also invested in later stage seed companies that are, already doing $1 million or $2 million in revenue. So we invest across that early stage spectrum.
So if people are listening to this and they like what you guys are all about, it's, pretty early pre-seed, seed, 100K, 200K checks. And is that usually a safe note? Is that a priced round? Is that a convertible note? What's the structure?
Yeah, we usually do safes or priced rounds. I would say we haven't really done convertible notes. And because we don't lead, we'll often come in on the same terms as the lead. We don't need a lead investor to build conviction, and we often commit and try and introduce you to the community of lead investors that we work with. In Fund 1, we've 120 investors, most of whom are world leading tech investors. And so we work closely with them on co-investing opportunities. So you don't just get us when we invest in you, you get the whole community of folks that also back us.
Very cool. And the fund size, which we'll get into how you raised it, but it's a $5 million fund. Is that correct?
Yeah, that's correct.
Awesome. Can you share how are you halfway through that fund, or, what's the sort of status of that fund? Yeah.
Yeah, we're fully deployed. So we've invested in 30 companies so far, which has been super exciting in that 100K to 200K check size. So it's been an incredible journey getting to go through and lead sourcing and diligencing and supporting on those companies with my partner, Josh.
30 companies you've invested in. How many companies do you think pitched you guys to get? It's always interesting hearing the funnel shape, which I talk about with founders all the time, but let's hear the VC funnel shape. Yeah.
Yeah, I'm trying to think. I think we had at least 12,000 calls last year, which included both LPs and founders. In terms of founders, I would say our top of funnel from an inbound perspective is really, really large. And then it was it was definitely a lot to sort through. And then I would say it's probably 0.5% of companies that we engage with, we invest in.
Wow.
0.5 to 1%. Yeah.
Is it the two of you, or do you guys have a couple associates and analysts and stuff like that?
It was just the two of us for Fund 1. And then we brought on Riley, who's our chief of staff. And then my brother Tate is interning for us this summer, and he's doing all of my video editing, so I can focus more on just producing the content and investing. So that's been really great to have support, because it was just us doing all of it.
So again, I always think it's useful when founders can understand what it's like, sort of day in the life of a venture capitalist. But how do two of you process X thousand startups? How physically, literally, how do you get through that many?
Yeah, I mean, so I grew up very involved in how do I automate and scale my time. So that's why I spend a lot of time building content. So I think the first is the amount of content that we produce and the transparency with which we have built BGV have been really nice, because I think it helps folks self-select. So it's okay, we don't invest in geos outside of US and Canada. We don't do, things after seed. I would say like being very transparent about that has helped like self-select folks in. And then from a processing standpoint, I think about a handful of things off the bat. So like one, like pre-seed or seed, that's very important to us. The second thing I think about is any conflicts within our portfolio. So I'm basically running through this list of, okay, are there any ways where I can be really respectful of a founder's time and make it pass because it's clear it's not going to be a fit? And so that saves both of us a lot of time in the long run versus taking calls with everyone and folks that might not be a fit for us. And so I will go through this list of, okay, are they pre-seed or seed? Are they located in the US or Canada? Do we have a conflict of interest within our portfolio? Is it a space that fits within our thesis umbrella? And kind of looking at how they have progressed so far. So one of the things I think about is execution velocity. So it's like, my favorite emails are like, hey, this is a problem that I desperately thought needed solving, and here's how I experienced it, like 2 sentences. And then it's like, and then I did, 300 customer interviews to figure out what solution was needed. I have like all of these people waiting to use my product. So I'd say like looking for an indication of customer pull within that initial email, because we get a lot of cold emails and we often take calls from cold emails, but really clear around what is that problem? Why are you uniquely positioned to solve it? And then what steps have you taken to validate that that problem is a really large one and that people are willing to pay?
Good stuff. Yeah. I like all that. I like the execution velocity. I think that's a nice phrase. I've seen some of these emerging pre-seed funds that are talking to a lot of founders. We'll put them through a form, right? They're kind of systematizing it. Do you guys do that? Or are you still kind of processing it all manually via email and stuff?
No, we have a form as well. So I find it's really helpful for like we get a combination of inbound deal flow from our investors, folks we co-invest with, founders in our portfolio. And then we also have a form where people can reach out cold. We want to make it a very like simple process for founders. And so a lot of those questions have like a question where if we know it's not a fit, we're like, okay, this isn't a fit for X, Y, and Z reason. And so I would say that's been really helpful. And founders have remarked that it has been quite transparent. And so, yeah, it's been super useful in our processing of deals.
Yeah.
I'd say a lot of it's still manual.
Yeah.
Yeah.
How did you get into venture? What's the quick backstory?
I got into venture because managing rappers didn't work out.
What? Say that again.
Because managing rappers didn't work out.
Oh, tell us.
Yeah.
What's that mean?
Yeah, sure. So I went to San Diego State. I studied mechanical engineering, and then I switched to computer science. But I always had a love for creativity and music. My mom is a fine artist, and my dad's a mechanical engineer, and so that combination has kept up with me my whole life. And so outside of school, I was super involved in helping plan music festivals and fashion shows and working concerts. And I couldn't afford to go to as many concerts as I wanted to go to. I was on a full ride at State, and I was like trying to, put together money for rent every month. And I was like, oh, I want to go to these shows, but they're like $50. And I was like, it gets unsustainable after a while. So I would reach out to these musicians or their managers and cold email them and be like, hey, really love your music. I saw you're in San Diego. Anyway, we can get an interview, or do you need someone to photograph the show? Because I had a camera and I love photography. And so I started interviewing these musicians, and increasingly what I found was super interesting from my perspective was like, how do you build a sustainable business as a creative? And then a lot of that came to be around like, how do you build a sustainable community online? I think that's a big shift in the creative industry, is the ability for artists to support themselves by building a community online. I say this with my brother, who's an artist, and building a community online, which has been really cool. And selling shirts, and people are asking for tattoos and etc. But increasingly, I found that it would have been really difficult to manage artists because it's not super diversified. You basically take one bet and you work on it for 5-10 years, and if it doesn't play out, it doesn't play out. And then I got introduced to venture through Silicon Valley, and I watched it and I was like, oh, I didn't realize this was a career. I thought it was something where you had to have a ton of money to get involved in and start investing. I thought the barrier to entry was really high. But once I found that, I was like, okay, I'm going to pursue this with everything that I have. And so I competed in a venture capital competition, and that's really where I found that spark. I was in a partner meeting where we were presenting an opportunity to invest in a company, and all of these folks that worked in VC were just grilling my team from San Diego State with questions. And I was like, oh my God, this is awesome. I love doing this. And so I was like, how can I do this more? And so I started applying for positions, and it was just rejection after rejection after rejection. I didn't have a network in Silicon Valley, and I was applying to these positions blind. I ended up getting an offer from a firm in Boston right before in February of 2020 when I was a senior in college. And then I ended up turning it down because I was like, I really want to stay in San Diego and be close to my family and my friends and where I grew up. And then shortly after I made that decision, COVID hit, and then I started tweeting. So I started tweeting about venture. That led to me writing an illustrated children's book called Seed to Harvest, explaining venture in a more transparent way transparently, I wrote it to explain why I was so interested in venture to my parents. And then my brother illustrated it. But that turned into me leading my first syndicate deal, and then meeting Josh, and then raising Fund One. It's kind of all snowballed from there. But it's been an incredible past couple years of putting everything that I've learned in theory into practice and developing my own sense of style and in the investing space, and building a firm has just been a really rewarding experience.
Yeah, that's awesome. And we're just about to get to raising that fund because that's the theme of this show. But I guess any other tips for people wanting to break into VC? Because it's not something you typically apply to jobs for, like most jobs. You kind of have to
I learned that the hard way.
Build a brand, write a book, become a Twitter famous, whatever, TikTok famous, and somehow work your way in. Any other tips for people wanting to get into VC?
Yeah, I think the core aspect of breaking into venture is if you think about it from a fund cycle perspective, folks usually hire when they raise a new fund. And so that only happens every 2 years. If you have 10,000 venture firms, that equates to, 10,000 positions available every 2 years. And so that's of course, other firms are going to hire more, and then some firms will hire less, but it's very competitive. And so one of the defining characteristics that I think about is, how do you build trust? And so either you've grown up in an environment where you have a ton of connections and you can build trust that way, where it's hey, this person that I've worked with for 10 years really recommends this person for this position, or you can build a brand online. And for me, it was I didn't have an existing network in Silicon Valley. So it was kind of I enjoyed sharing my thoughts on venture. I found a lot of people that I like to nerd out with on random term sheets or LPAs or different technical aspects of venture. And so I found a community online, and that was my path, but I didn't necessarily choose it. I was just oh, cool. An outlet for all of these things that I'm curious about.
And you kind of got turned on to venture by watching HBO Silicon Valley, right? Yeah, I think you said that quickly. Yeah. Which I think is so funny, because I use that all the time when I give this funding hacks talk. I refer to Eric of Pied Piper and how he's an introvert and he's got to get out there and raise capital. And, I love that show.
Yeah, it's awesome. I think it's funny because it's presented as a satire, but it's super close to the truth from what I've seen. And yeah, it was just very, I had never seen venture portray. I didn't know anyone in venture. If I was looking through our SDSU alumni network, and I was one person that works in growth equity. And I was like, people are always like, reach out to your alumni networks in like areas that you're interested in. And it was like, no, there was not too many people I could reach out to. Yeah.
Just to finish up on breaking into venture, you wrote the children's book, you tweeted it a lot, you really kind of built it. You also have a podcast. Why don't you mention the podcast? Did you start the podcast before getting into venture, or did you start that after?
I honestly started the podcast because if you look at a lot of the podcasts in venture, most of them are very oriented around like similar stories and will often center a very like male-centric view of the industry. And although only 11% of decision makers in venture are women, I met so many of them throughout my fundraising journey and breaking into venture. And they just had these incredible stories. And I wanted to share like a more diverse perspective of venture, people who have had like very twisty, turny routes into it. And so I started Seed to Harvest to highlight the stories of founders, investors, and creators. And most of them come from diverse backgrounds. And that's something that's really important to me, because for me, like, that's why I was like, oh, I'm interested in venture, because I had never seen like a female role model in venture before Silicon Valley. And so I was like, oh, I want to provide this experience for other people that are curious. And also I was going through fundraising, and I was just like, you have like 500 calls of you telling your story and pitching yourself and building relationships with folks. It was kind of nice to have something to break up the day where I was like, oh, I'm curious about X, Y, and Z topics. And there's like, there's nothing of a transactional nature going on with this podcast. So I think it was really nice to have that as a break in the day and be able to share stories that I really enjoyed hearing. And yeah, so that's been super fun. And like, I'm a content creator at heart. So it's been nice because we invest in a lot of creator tools like Beacons, Palette, FIPM. And so from an investor perspective, it's really helpful because I'm like, oh, this is like a tool that I would use as a creator, and like, or maybe as we're going through diligence with creator tools companies, I'm like, oh, actually this isn't like a problem that's like a super massive problem for me or other creators that I talk to. So it also adds a lot of perspective to my views as an investor and gives me a platform to share the stories of the founders that we invest in on as well. So
repeat the title just for folks that want to find it.
It's also called Seed to Harvest, so same name as the book.
Awesome, Seed to Harvest, cool. Okay, let's get to the gist or the focus of this. Talk about raising that first fund, maybe just tell the story of how you guys approached it. You mentioned 120 LPs, 120 investors in that fund. That's an amazing number. So tell us how you kind of cracked the nut on this.
Yeah, it's, man, people tell you that fundraising is hard, and that is very true. Like even more true than I thought it could possibly be. But fundraising is really difficult. And I think it, like, in some aspects, like it is really, looking back, it was really helpful that it was difficult because it helped shape my beliefs as an investor and the ability to tell my story in like a succinct and compelling way when you have to do it like 500, 700 times with folks. And those folks, some of them were really familiar with my work, and then some of them knew nothing about me at all. And so you have to like adapt the aperture of the story that you're telling. So it was really great practice for that. But as for how it started, I met Josh, who's my partner in Fund One, in November of 2020 when I was doing my first syndicate. And at the time, he was thinking through raising a venture fund. He was building a recruiting agency and doing some angel investing as well as syndicate investing. And we just like got along really well. We met on the internet, and then we met started having like deal flow calls, and those turned into like daily texts about like, oh, did you see like this deal or this deal? And just like built a friendship over time, which has just continued to grow as we've gone through a lot of ups and downs as fund managers together. And so in December, we sat down at Laguna at the Montage, 6 feet apart, wearing masks. And we were like, what does a fund look like if we build it together, and we were kind of like thinking through all these different aspects of portfolio construction and, what was the investor we were going to target? What's our broader mission? What does fund 1, fund 2, fund 3 look like? And after that, we kind of went home for the holiday break and decided that we were going to work together probably a couple weeks after that. And he had been like pushed to start raising this fund by Samit Gajri and Arjun Sethi at Tribe. And so they had originally committed, and then it was just like a scramble to get our deck together. And then we were off. We were raising. We sent out a bunch of emails to folks that we had worked with on syndicate deals in the past. And I think one of the things that's difficult when you're new to venture is it's rare that you'll have someone that is a large institutional investor take a bet on you, which is called an anchor investor. And so we didn't have that. And so it was like, okay, we're going to have high net worth individuals that resonate really deeply with our mission. I think that's going to be like our bread and butter as LPs. And that did end up being like the case for us. And I was also working full time at the time. So I was at WorkOS from February to I started BGV full time in July. So we did a first close in April on 1.6 million, April of 2021. And then we started investing. And I think that it's interesting as a fund manager to be investing and fundraising at the same time, because my day-to-day looked like, all right, I'm blocking out like 2 hours in the morning to do my follow-ups on emails, send docs, and like diligence questions to founders. And then I would have a day of like 7 to 8 calls with maybe like 3 LPs, like a couple founders, a couple co-investors. And so it was just like back to back to back to back to back for like 10 months. And I think that the difficult thing about fundraising is your outcomes are variable. Like so it's really important to like keep an eye on your like input metrics. You're like, all right, I'm going to email at least like 20 new folks, or try connecting with them in this week. And then I'm going to try and have, 5 or 6 meetings with LPs a week. And, but the outcomes are variable, which means that you won't close the same amount of money, even if you're putting in the same amount of time. And so I think that can be really challenging. And one of the biggest lessons that I learned in our first fundraise was just having the patience that the outcomes will follow when you're working really diligently. And then also to have like multiple balls up in the air. So it's like, okay, we're working on fundraising. We're also working on investing. Like if there's a blocker somewhere, there needs to be other work that we can do that to further build the firm that's not dependent on someone else, because I think that that's like a really tough position to be in, where you're like sitting at home and you're like, okay, I can't do anything because like this thing is blocked. And so finding the time and space to be proactive in those doldrums, which is a topic that you and I talked about on your podcast.
Yeah. No, I like it. This is all good stuff. Okay. A couple questions. So how many investors do you think you approached or pitched, whatever you want to call it? Part one, how did you identify or find all those people? Was it just friends of friends or some other method? Mm-hmm. And then 2, you mentioned you did your first close, 1.6. For anyone not familiar, what does that mean? Why did you do that first close? So couple questions, take it away.
Yeah, sure. So I'll work backwards. So for first close, what that means is like when you're raising for a venture firm, you're trying to get everything in order. So you're getting your LPA ready with your lawyers, which is a limited partner agreement. You're doing your fund formation. Honestly, I found legal is probably one of the lengthiest processes of setting up a fund. I have a tweet thread on fund formation that I'm happy to send you so you can post in the show notes, but it is quite an extensive process. And so in tandem with, you're basically going through and getting commitments, and you kind of want to raise like at least 30% of the fund before you do a first close so you can start investing. And then you can structure your closes in different ways. But what they are is like a self-imposed deadline so that you can start investing and like running your business. And some of the things we were like really aggressive with deadline settings, and it took like, it would be like unforeseen delays would come up and be like, oh, okay. But like whatever deadline you set, it often gets pushed back. And so we were trying to be more on the aggressive side of deadline setting, so we could, try and get as much of the like urgent stuff out of the way. And then you always have like a couple delays come up. I think we had planned on doing our first close in maybe sometime in March, and then it actually ended up being on April 1st, which I thought was like kind of it's a good day.
Sure.
And so that the process of first close, basically like you have your committed LPs, you have their amount, and then they'll go through and sign the LPA, so the limited partner agreement. They're accepted into the LP, which is the entity that is a partnership of all the investors in your fund. And it was also the entity that invests in startups. And then your lawyers review all those LPAs and they're like, yep, this is good. Or maybe they're like, oh, this person needs to like sign for a different entity, or, basically just checks it. And then after they review, they send it to you for countersignature. You sign it, and then those LPs are considered admitted, and then you can do what's called a first capital call. And so the capital call means that you can say, hey, everyone, everyone has different capital call structures. So some people call all the money up front, some do it quarterly, some do it over 5 years, but ours was over 2 years quarterly. And so we're like, hey, everyone, like 12.5% of your commitment is due at this time. We have X, Y, and Z commitments. And so, here's our wiring information, basically. So that's what the process of first close looks like. In terms of the number of investors that we met with, I am like very much an email first person. Like my preference has always been to like do things over email. I'm a writer, and I just think it's like a much more useful thing of time. And so we would send out like information emails to folks that we had interacted with. And like how we found them was honestly, a lot of it was like me going through my Twitter following. Because at the time, I think I have like 30,000 Twitter followers now, but at the time I think I had like around 9 to 10K. And so a bunch of those folks were involved in venture. And so if I saw anyone followed me that was either a VC, an operator, an LP, I'd reach out and be like, hey, I'm raising my first fund, let me know if you're interested in some more information. I'm happy to send it along. I would send that information along. They would sometimes come back with either like questions.
Sorry to cut you off. Is it information like a summary or one pager or what?
Yeah. So it was like a short thing about, this is who we are. This is what we're raising. This is our timeline. Here's some like bullet points on our traction so far. Here's some key investors. So it was like, and Andy Weissman was like the first, I would say, like very big name investor that invested in us. And so I found that we were able to build credibility by bringing on people like him, like Jenny Lefcourt, Katie Stanton, into the fold, because they provided credibility in the broader venture ecosystem. There were names that folks recognize from really respected firms. And so that was definitely really helpful. But I think like as for calls, it was probably somewhere on the magnitude of 300 to 400 LP calls, but we interacted with like so many more over email. And we would only take a call if they, like, our call to action has always been like, let us know what questions you may have about investing. And I got that call to action from this really great sales leader that I used to work with at a growth equity fund in San Diego. And I was like, I always love that call to action, because I think it allows someone to opt in. And it's also like, if I'm going through my inbox and someone is like asking for a call, I'm like, okay, I need to like, it's like a couple extra steps and it adds friction to the process. Whereas if you're like, let me know what questions you might have about investing, it allows them to either respond and be like, no, I'm not interested, or they can ask for more information, or they can be like, I have a couple questions. Can we hop on a call? And so it really leaves it open for interpretation as to what amount of time they want to dedicate to digging deeper in the opportunity. Whereas like asking for a call is like, I will be like, please give me 30 minutes of your time, when there hasn't necessarily been that like initial interest yet. And so it was definitely more oriented around I think that was like a very key part of our fundraising.
That's good. I know we're coming running out of time here. Any other tips you would give first-time fund managers, or even if you could rewind the clock and advise your younger self? You're pretty young still, but go back 3 years and advise your younger self. What would you give?
Yeah. I think that the ability to be confident in your investing style, like as I was raising our first fund, we would hop on calls sometimes and I would know that investors weren't a fit, but I'd be like, maybe they'll make an exception for me. And as I went further on into my fundraising journey, we would have a call and I'd ask like a handful of questions where it's like, what are your thoughts around portfolio construction? Are you adding new managers? How do you build relationships with fund managers? What does your diligence process look like? These questions that I was afraid to ask when I started fundraising ended up being really important, because sometimes I'd be on a call with someone and they'd be like, yeah, we're only investing in emerging markets. And I was like, okay, well, we're US and Canada, so not going to be a fit. I'm happy to, share other fund managers who might be a fit over email, but, would love to respect both of our times. And I would say just not being afraid to say no to an LP when they weren't a fit was really nice, because I wasn't waiting for them to say no. I was like, okay, those are your rules. Perfect. We don't fit that. That's totally fine. But I feel like it's probably not the best use of our time to connect now.
Really quick, in 1 minute or less, what were a couple of those other questions you would ask LPs? Like you kind of mentioned it briefly, but give a couple more of those questions.
Yeah. So I was like, are you deploying right now? Is your most recent fund closed? If not, when will it be closed? When are you able to make commitments? Because that's really important. If someone can't commit because their fund isn't closed yet, then you need to reconnect to them later on in the process. You can't count on that commitment, even if it's really strong. And then the next ones would be like, what geographies are you oriented about? Some of the funds with like diversity requirements would be specifically for women or people of color. And so that was like, it's kind of like an either or situation in some cases. And so if it was, I'd be very clear, like, does your diversity mandate apply to me? Because sometimes it didn't.
Sure.
And it's like an interesting bucket system. But I think that was really important to understand. And then some of them were only looking to invest if you are leading deals, which we don't. And so if that's a hard blocker, that's out of the question for us. Some firms are looking for a specific number of shots on goal, as they call it, that you're looking to take. We only do 30 in a portfolio. I want to build deep relationships with every founder that we invest in. And that's not possible if I'm investing in 50 plus companies in a year and a half. And so those are some of the questions that I would ask. So it's like common objections that I've heard I'll bring up in the beginning of the call, or even in my intro. I'll be like, this is our style of investing.
Those are great. All right. I will let you go. If people want to learn more, it's Behind Genius Ventures. What other calls to action do you want people to follow you on Twitter? What's your Twitter handle? What else do you want to plug?
Sure. Yeah. If you're interested in hearing more stories about venture, please follow my podcast at Seed to Harvest on Apple and Spotify podcasts. And then my Twitter is Paige Finn with 3 N's. And I tweet a lot about venture and things that I'm learning about. And then if you're a founder and we sound like a good fit for you, please feel free to reach out to me either through the form on our website or my email, which is paige@behindgeniusventures.com.
Awesome. Lovely. Wonderful. Lots of good stuff. I love some of this real tactical stuff, like the questions you're asking LPs and a few other parts here. Really great stuff on the first close discussion as well. Thank you, Paige. Appreciate it. And yeah, check out Behind Genius Ventures. Sounds like a cool fund. I love the future of play angle in addition to future of work. So thank you so much. And maybe we'll catch you after your next fund. All right.
Yes. All right. Take care, Nathan. Thanks so much for having me.
Thank you.